The company maintained an allowance in the amount of $259,446 and $218,319 for credit losses at June 30th, 2026 and December 31st, 2025, respectively. The company has an operational relationship of several years with our major customers, and we believe this experience provides us with a solid foundation from which to estimate our expected losses on accounts receivable. Should our sales mix change, or if we develop new lines of business or new customers, these estimates and our estimation process will change accordingly. These estimates have been accurate in the past. We build dynamic, scalable businesses by selling specialty foods that are difficult to find through traditional channels. Our expertise is forging close relationships with the producers, growers, makers, and distributors of specialty products, then carefully selecting our suppliers based on their quality, uniqueness, and reliability. Our team is adept at evaluating and certifying the food safety and supply chain capabilities of small batch producers who do not typically sell through broad-based sales channels. We seek out the freshest, most unique, origin-specific gourmet cheese, meat, produce, and premium ingredients available, and distribute them directly from our robust network of vendors and warehouses within 24 to 72 hours of an order being placed. We also source, package, and brand a meaningful segment of these products ourselves, enabling us to better control the assortment, offer more flexibility and variety to our customers, and capture additional margin. We leverage this unique, premium assortment to serve the needs of professional chefs in settings such as restaurants, hotels, country clubs, national chain accounts, casinos, hospitals, and catering houses. We provide these premium customers with products that cannot typically be found through their broadline distributors' warehouse assortment. We distribute these products directly to professional chefs in Chicago through our subsidiary, Artisan Specialty Foods, Inc., and nationally through our e-commerce businesses on Amazon.com and our own website. We also dropship specialty foods to professional chefs nationally through the websites of broadline distributors such as US Foods, Inc. Lastly, we sell these foods to large retailers for resale on their shelves to the end customer. Between this variety of sales channels, we are able to serve our professional chef customers wherever they are located. We operate our airline catering distribution business out of our owned 28,000 square foot facility in the greater Chicago area. Additionally, we operate a warehouse in Denver, Colorado, measuring approximately 20,000 square feet. In March 2026, we sold our facility in Mountaintop, Pennsylvania, which previously supported both our retail and airline catering operations. In connection with this sale, our airline catering operations have been relocated to the Chicago facility, and our retail business is being wound down. Our facilities have the capabilities to pack and ship frozen, refrigerated, and ambient products, enabling us to offer a broad range of specialty foods. We maintain GFSI, SQF certifications, ensuring compatibility with the highest global standards for food handling and meeting the quality and food safety expectations of our premium customers. These warehouses are equipped to ship packages and pallets of all sizes via overnight carriers. We also utilize our own fleet of trucks to deliver directly to professional chef customers within our delivery footprint. Our proprietary technology platform underpins our entire business, driving transparency and efficiency up and down the supply chain. Orders flow in real time, whether to our warehouses or to our vendor partners, to allow for fast handling and fulfillment. Our picking is enabled by efficient scan-based handheld devices, ensuring order and inventory accuracy. Our warehouse management software optimizes pick routes for common items and order types, recommends a box size, and calculates the appropriate amount of packaging and ice required based on forecasted temperatures along the delivery route. We have built a team consisting of passionate, committed, and food-obsessed people. Our average tenure outside of seasonal workers across the company is over 5 years. Our merchandising team has deep connections within the specialty food space around the globe. Our customer service and sales teams, as ex-chefs themselves, go beyond customer service to offer our professional chefs customer support, menu ideas, and preparation guidance. Financial highlights for the fiscal quarter ended June 30th, 2026. We reported revenue of $13.1 million, a 21.5% decrease compared to $16.6 million in 2025. Cost of goods sold for the 3 months ended June 30th, 2026, decreased by approximately 22% to $9.6 million compared to $12.4 million in the prior year period, which is primarily due to a 21.5% decrease in revenue. Gross profit declined by 20.1% to $3.4 million, while gross margin increased to 26.2% from 25.7%. Total operating expenses decreased by $429,000, or 12.4%, primarily due to the factors described below. 6 months ended June 30th, 2026. Cost of goods sold for the 6 months ended June 30th, 2026 decreased by approximately 20% to $18.7 million compared to $23.5 million in the prior year period, which is primarily due to a 21% decrease in revenue. Gross margin remained flat at approximately 26%. Total operating expenses decreased by $1.3 million, or 18.5%, primarily due to the factors described below. As of June 30th, 2026, we had current assets of $10.1 million and current liabilities of $3.5 million. Net working capital was $6.6 million. We believe we have sufficient liquidity to fund operations for at least the next 12 months. With the sale of the Pennsylvania facility, operating cash flows are expected to continue to improve as facility costs and lower margin product sales roll off. We do not anticipate the need to raise additional capital. We are exploring new credit facility options to provide working capital flexibility. Remaining severance obligations are not expected to be material, and staffing levels are being managed to align with current business needs. During the 3 months ended June 30th, 2026 and 2025, US Foods Inc. and its affiliates accounted for approximately 40% and 34% of total revenue, respectively. Gate Gourmet accounted for approximately 18% and 15% of total revenue, respectively, during the 3 months ended June 30th, 2026 and 2025. During the 6 months ended June 30th, 2026 and 2025, US Foods Inc. and its affiliates accounted for approximately 40% and 34% of total revenue, respectively. Gate Gourmet accounted for approximately 17% and 14% of total revenue, respectively, during the 6 months ended June 30th, 2026 and 2025. In the opinion of management, inflation has had a material effect on the company's financial condition and results of its operations. The company has seen the impact of inflation across its costs for fuel, shipping, cost of goods, and marketing. Balancing the management of these increases with the willingness of our customers to pay higher prices will continue to be a key focus for the company this year. However, no assurance can be given that we will be successful, and inflationary pressure on our profits will likely continue through 2026. As disclosed in Part 2, Item 9A of the Annual Report on Form 10-K for the year ended December 31st, 2025, management concluded that the aforementioned material weaknesses in internal control existed for the company. Management concluded that these material weaknesses still existed as of June 30th, 2026. Management has begun implementing measures designed to remediate the material weaknesses described above. These remediation efforts include: management will continue to evaluate the design and operating effectiveness of these remediation efforts. The material weaknesses will not be considered remediated until the applicable controls have been fully implemented, tested, and determined to be operating effectively for a sufficient period of time. On May 19th, 2026, the company held its 2026 Annual Meeting of Stockholders, the Annual Meeting. At the Annual Meeting, the company's stockholders voted on the following 3 proposals. Proposal 1, Election of Directors: James C. Pappas, Mark Schmulin, Denver J. Smith, Lucas D. Kazonas, and Gary Schubert were each elected to serve on the board for a 1-year term that expires at the 2027 Annual Meeting of Stockholders, or until their earlier death, resignation, or removal, and their successors are elected and qualified. The final results of the voting were as follows. Brady Smallwood was not nominated to stand for re-election as a director of the company at the annual meeting. Accordingly, Mr. Smallwood retired as a director of the company, effective May 19, 2026. Proposal 2, Ratification of Auditors. The company's stockholders ratified the previous appointment by the board of CBIZ CPAs PC as the company's independent registered public accounting firm for the current fiscal year. The final results of the voting were as follows. Proposal 3, Say on Pay. The company's executive compensation, by non-binding advisory vote, was approved. The final results of the voting were as follows.